Hey guys, it's Steven here with another video on another EV company that's been gaining a lot of popularity, XPENG. So these investments are going to be more of a speculative investment type. I am traditionally a fundamental investor that looks for companies that are generating profits today with the high potential for future growth as well. But we'll go ahead and look through these companies with a fundamental analysis type of lens, and then we'll also take in consideration that they're not going to meet a lot of those criteria, but see if they have some potential to continue investing in them, or possibly putting a small portion of them in your portfolio. So today we're looking at XPENG, pardon my pronunciation there. They have two vehicles that they primarily sell. One is that G3, their smart SUV, super long range SUV, and then the next, we scroll on down here, is the P7 smart sedan. So XPENG, from my research and really looking at the videos and digging all the news with them, appears to me to be most similar to Tesla of the United States. So XPENG seems to be the Tesla of China, and I'll kind of explain why as the video goes along why I believe that is the case. So let's go ahead, and on the website we'll go ahead and look at the information for investors. Of course, there is other competitors as well, like NIO and Li Auto, but today's focus right now is going to be on XPENG. So XPENG was founded in 2015. It is one of the leading EV manufacturers in China, and when it comes to also autonomous driving. So they've been around for actually quite some time now. They actually were recently accused a few days ago by Elon Musk for actually taking their source code when it comes to their technology. And they've also been accused in the past of taking some technology from Apple as well. But you know how those lawsuits usually go. It's simply going to be a slap on the wrist and people move on. And that's unfortunately how most of this business works. But let's go ahead and look and see what makes them so unique. There are two vehicles are on the higher end when it comes to the luxury vehicle. So it's considered medium to high luxury type of vehicle. And when you look into other videos and you look to see their customers and see the quality of the material within these cars, they're actually pretty superb. The inside feel when you're looking at the texture, the leather seats, warming of seats, and all those type of really nice features, the ability to play mobile games on the device while you're in the car, watch a movie. They have all sorts of essentially accessories and things you're able to utilize when you have this car. One thing with XPENG compared to NIO is that NIO is more focused on a whole lifestyle revolving around NIO, and they have that battery as a service. Now XPENG does not have that. But the reason I mentioned earlier before is why XPENG seems like they may be more close to Tesla or possibly the Tesla of China is the fact that XPENG does already have a manufacturing plant within China. So they have their own plant which they manufacture their own vehicles which they can reap the rewards from production efficiencies and control their full supply chain when it comes to the vertical integration from their supply chain. So that's a lot different from NIO, which NIO has another government entity producing the cars for them. So that's something to keep in mind for that. So let's see what other information they can tell us here on the XPENG website. It's just saying here they're trying to get transform EV with technology and data, shape the mobility of the future. So basically what all the EVs are saying, okay, other EVs are saying. So other things for investors, it shows us financials. We'll look through financials a little bit later on a different platform. That's a little easier to see for them. Presentation, stock information, news. So let's go ahead and dig into the news. That is a big part of what drives the everyday price and how you see those big fluctuations and volatility within all these EV stocks. And XPENG is one of them that takes either a big spike or a big hit depending on what news comes out. So let's see what they have to say here. So recently on November 20th, they presented a new version of their P7, a limited edition. So that is definitely one of their staples. Okay, they announced the next-gen autonomous driving architecture. So that's really good. They have been focusing a lot on their autonomous technology versus, I shouldn't say versus, but NIO really, they do have their own software, but they do depend on an external resource for a lot of their autonomous driving type of technology. So NIO actually uses Mobileye, which is produced by Intel for some of their autonomous technology when it comes to that. So here, other news. Then nothing too crazy, just third quarter results, so nothing too recent that's come out. So let's go ahead then and dive into where XPENG really operates and where we see their market expanding. Here we have locations, so we can see where they really operate from, if they have a strong foothold or footprint in the places they operate. So that's really important when it comes to electric vehicles, especially if they produce their own type of charging stations and really for service and things as well. So we're looking at this map here. Looks like here they operate primarily right now out of China. Now in the future, is it possible they expand internationally? It's possible, but keep in mind, it is unlikely though. What we've seen with previous automakers when it comes to Chinese automakers is that they have a pretty strong domestic presence within China, but their brand doesn't really catch on internationally. So you don't see Chinese automakers in the United States, and you're not going to see that many in Europe and other continents either. So that's something to keep in mind. While there is a really large consumer base in China, the largest consumer base in the world with 1.3 billion people, just keep in mind the international presence for some of these Chinese EV companies could be limited. Will they try to break in? Of course, they will try to break into international markets, but it's whether those international markets will be accepting of them, right? So something to keep in mind. So we're looking at this map here. At least in their domestic market, we see they do have locations in very critical points. Really big cities like Beijing here, and then we have, I'm just trying to scroll through. Their map is not the best when it comes to interaction, it seems like. Shanghai over there, Guangzhou over there, Chengdu as well. So you see they have a lot of locations that they're able to get to and have access for people to view their cars, test drive their cars, have service. So you see that they have a good footprint at this time, and they will continue to expand. They are expected to grow their revenue significantly as they roll out more cars, and the Chinese policy where they want to have essentially 25% of all vehicles, especially for new sales by 2025, to be at least hybrid electric vehicles, is going to have a big impact on their business. And China's goal also is by 2035 to have all new sales be hybrid or electric vehicles and completely phase out ICE vehicles. So this is going to be a big push for this, especially when it's driven by the government. So now let's go ahead and take a look at the financials and see what we're looking at. We're looking at their general overall business seems pretty strong. They have a strong presence so far. Their vehicles look really nice. They have good customer reviews from what I've seen. I've seen walkthroughs of their facility and also test drives of their vehicles as well. So those reviews from what I've seen so far have been good. So now let's look into the price. Okay, and that's a big thing that we're looking at, right? Whether this can be a good investment. So we're looking at their price. The last price was around $64.27 when it closed. Today there was quite a drop in all the EV vehicle markets, especially when it comes to Chinese automakers, because there had been some news that came out today that the Chinese government is looking into EV automakers. They're making sure that they are abiding by their rules and they're not taking any shortcuts essentially and following the regulations. So while that is taking a hit today, it is still good news. At least they're keeping up with those companies, make sure everything is going to be going along smoothly while the government wants that transition to all those EV type of vehicles by 2035. So it was a 9% drop today, but considering the huge, almost exponential growth that we've seen in XPENG over the past months, it is to be expected, right? There's nothing that grows and continues to grow positive forever. Then that would be a huge issue if that was the case. So Here we see that they've been on the New York Stock Exchange since about August of 2020, and they were trading relatively stable for about 2 months until around late October. So around $17 to probably around a little over 20. They're pretty steady there. Then at the end of October, they started shooting up at that time. They just skyrocketed from around $20 up to even a high of $70, almost $75. Now selling today at $65. So let's go ahead and look at a 1 month little spread here, so we can see that they've really been shooting up pretty fast. Initially, October 28th, they had a nice little plateau. Then they shot up, hit another plateau. They shot up on the 12th again, hit another plateau, and they've shot up again, and looks like they're plateauing again. So you should expect them to be at a plateau for a little bit, and then they might shoot up again after that. Okay, when we're looking at their market cap, it's about $47.2 billion. So that is a pretty hefty valuation for their company right now. When we're going to dig into their financials. Okay, so let's go ahead and start digging into that. So when you're doing fundamental analysis, you're going to be looking into their ratios, their statements, and seeing what's going on. So we're going to notice a lot of those things don't really necessarily apply to when we're looking at EV stocks or these extreme growth stocks. But it's nice just to see and be able to compare what you would expect to see from a company that you're trying to buy into for value versus for growth. So here, when we're looking into here, there's really not that much information on here for XPENG. Why? Because they're not making money right now. So really looking at this information is not necessarily the most useful. So when we notice that there's not even that information, even on Charles Schwab, which is a great trading platform to see all this information on. So it doesn't show any sales growth. There's no dividend information. Of course, they're not going to have dividends for a long time. No annual growth information, which could be really useful. So it would be good to know how much they had grown by in the past year and versus what their target is for the next year. From some information that I have read is that they did receive a pretty significant increase from the previous year in production, and they have been producing a good number of vehicles, especially since they have their manufacturing plant that's already been built and producing vehicles directly for them, as they are vertically integrated in that aspect. So when we're looking here, the cash flow margin, negative 149%. Cash to share, $3.80. Current ratio, 3.92, as expected for a company like this at this time. A long-term debt to capital, 7.69. Obviously, it's a little high. Okay, so we're now, because there wasn't much information there, see if there's anything we can get from the statements. Can we even make a good judgment on this company, right? Especially when we're looking at the numbers. Annual income information, we see 2018, 2019. Operating expense, about 245 million there, and then it grew to a higher operating expense in 2019 because they're growing, $868 million. And then the big thing we're looking for here is the net income. So net income in 2018 was negative 201 million, and net income in 2019 was negative $525 million. So they're burning through a lot of money. And it is very expensive to develop technology in the EV market, especially when it comes to battery development and the manufacturing process. Well, you've noticed when you listen to especially Elon Musk talk about what makes electric vehicles so hard to produce, or what's the most difficult part about it, it's not necessarily the design itself. It's the manufacturing process through the plant and trying to increase those efficiencies. The more vehicles they produce, especially with a company like XPENG, they have their own factory as well. They're able to figure out things to do things more efficiently and cut their costs. When that happens, they're going to have a much larger profit margin for each vehicle they sell. So that's when they're going to become profitable. Now, when that time comes, is up to debate whether it's next year, the year after that, or 3 years down the road. But this is a growth company, so you're not going to be expecting them to make money immediately at this time, especially with this early in its development. So now we're looking at just the quarterly, see if there's any information for the quarterly information. So the Q3 2020. Net income negative 169 million for the third quarter. So They burned through a lot of money. One good thing, however, though, for them is that they do have the backing of the local province, the local government province that has given them monetary support to keep them running as well. So something to consider. It is a little bit different doing business when our business opens in China, is that usually they do have, the ones that tend to get successful tend to have a little bit of guidance from the Chinese government. And it does make sense in this case, as the Chinese government is the one pushing for all these green energy alternatives for electric vehicles. And that is in their policy and plan to have essentially 100% utilization of electric vehicles by 2035, especially for new sales. So we see from the balance, from the income statement before, there's really not much to glean from it. They're essentially every quarter using up several $100 million per quarter, and that's not much, honestly, much different from NIO, which is burning through money the same way. Okay, and then the only difference is with Tesla, they've realized their first few quarters of actual net profit from their operations, and then that's what kind of separates Tesla from these two Chinese EV makers at the moment. And then when you consider the international market, the chance for Tesla to reach international markets, it's already being seen, and they're already developing products that are going to be specifically tailored for international markets. For example, in the European markets, they're already looking into designing compact cars or hatchbacks that kind of fit more the lifestyle in European countries where there's much smaller parking spaces and more dense population. Okay, and whether or not these Chinese companies like XPENG and NIO can expand to the market is something to consider. Okay, so here, one of the things I really like to look at in the balance sheet, let's look at the annual. The big thing I like to look at is really their long-term debt and how long it would take for a company to pay off their long-term debt. So right now, in 2019, they had a long-term debt of $240 million. That is actually not ridiculously high. When we saw earlier, and when I looked at a sheet from NIO, they actually had almost $1 billion in long-term debt. So depending on how quickly the company is able to pay off its long-term debt, it's also how comfortable you are in investing in that company. Now, if they get more cash disbursements from the government to help support their operations while they're waiting to get profitable, then that's a different story, right? So there's not much on the balance sheet. They're in the negatives, in the red. And then we're looking at the cash flow statement now for the annual cash flow statement to see how much it costs. The big one I like to see here, look at the capital expenditures to see how much money they put into the equipment, machinery, other things they need to buy to use to produce their product. $271 million in 2019 is what we see there. So yeah, they have a good amount on there. So when we're looking at the financial statements, financial ratios, just a quick glimpse. If we're approaching from a fundamental analysis type of way, there is no way. There's no way you'll be investing in this type of company, right? And that's why this is considered a speculative investment. Now, if you look though at their direct business model and what products they have available right now in their two selections of EV vehicles and where China wants their electric vehicle use to be within the next 10, 20, 30 years. Is there potential there? Yes, absolutely, there is potential there. But if you're investing on fundamentals completely, this is not the right type of investment for you. There are other fundamentally sound companies that are making money today that you could invest in. Now, whether or not they can generate the amount of returns these more risky speculative investments give, it's not likely, right? They're not the more fundamentally sound companies right now that are more value type of companies. They're not going to generate the potential that these more speculative companies can give, such as these EV companies like XPENG, okay? But the risk associated is also much different. They have to be able to produce the amount of vehicles you expect them to equal the current market capitalization it's been given at $47.2 billion. So would you be dumping a lot of your money and your portfolio into a company like this if you want to invest? Absolutely not. Okay, so that is definitely not the right way to go about it. When you're looking into speculative investing It's about dedicating a portion of your portfolio that you're comfortable with, because there is very high amount of risk with these type of companies. They have no established track record, for producing profits, and they have a lot of different competition. This is not even to mention that there's a lot of other Chinese EV vehicle companies that are competing with them directly as well. There's Li Auto, BYD, and others that are still up and coming. And that's not even including other competitors that are the legacy automakers and how they make their transition into the EV market, right? And that's something that could really be discussed as well. And when you're really looking to see if there is really that big of a lead for these EV companies. So one thing that's an advantage to the legacy automakers is that they have very strong established production factories where they can really be efficient at producing those ICE type of vehicles. Now, if we were to change that and create battery EV type of vehicles, can they make changes in their production, in their production manufacturing plant to accommodate that? Most likely with their experience, it is possible. The big hiccup in which gives the new electric vehicle companies their potential and their lead is the fact that they have already the technology when it comes to their batteries. And then also a big part of it is their autonomous driving software that's extremely crucial for this type of new market, right? So let's say you are a legacy automaker. How are you going to be able to compete? Are you even going to be able to catch up to these electric EV vehicles? So from the research that I've seen, it is a possibility. We've already seen sources that GM they already confirmed that they're going to be dedicating $26 billion dedicated to EV development and research. If you're comparing that to the market cap of some of these companies like XPENG, their total market cap is only $47 billion. And GM is willing to dedicate over half of their market cap directly to EV development. So if they are able to hire 1,000 or 2,000-3,000 engineers that can look into these batteries and possibly reverse engineer the Tesla battery or the NIO battery, will they be able to put that into production? The answer is probably yes. They might be able to do it. And it's hard for you to say that these new EV companies are the ones that are going to be shooting up forever, right? The legacy auto companies are not just going to sit around and let themselves be run over or die out like the dinosaurs, right? They have the capital to try to catch up, and they have the potential to do that. The other big one that I mentioned is the autonomous driving software. The autonomous driving software is a big part of what makes the EV vehicles so attractive. So how can the legacy ICE vehicles, ICE manufacturers, somehow catch up when it comes to that, right? That seems like it's something that's much more difficult. Software might be a lot more difficult to develop from scratch, right? When you think about it from that aspect. Now, one way they can, however, is that there are already companies that are involved directly with autonomous driving technology and software. The biggest one I've mentioned is Mobileye by Intel, which is going to be a big competitor, indirect competitor to XPENG, Tesla, and these other companies that have developed their own autonomous driving technology. So what can a legacy automaker do if they want to catch up? They can use the Mobileye technologies from Intel or other competitors and implement that, integrate that into their new EV vehicles, and that could provide a similar type of experience, maybe not exactly the same experience, but maybe a similar type of experience that you're going to get from these other EV companies. So just keep in mind that there is a lot of information out there before you invest in these more speculative investments. Whether you believe that there is a potential for a high gain, yes, absolutely there can be a huge potential for a gain, but only invest in them what you're willing to potentially lose, because there's so many of these EV companies. There's also, keep in mind that there was also a bubble in the past for other types of industries, like the IT industry in the past, where essentially every IT company known into existence was climbing up, reaching new highs. Everyone was making money. They couldn't see how they were going to lose money. They were holding on to those companies. But what ended up happening is that when the bubble burst, 90% of those companies vanished. They disappeared. They didn't actually have a competitive advantage. They did not have anything that distinguished them from other IT companies. And the strong ones and the ones with legitimate advantage were the ones to survive. So be careful out there, you guys. There's so much information out there. And as a fundamental investor myself, I see this information with all these EV companies and all the people making all this money and the stocks going up on them. Now, have I invested myself into some of these? I definitely have considered it. And I do have a really small, very small allocation of portfolio to some EV related companies, and I can discuss that with you guys in another video. But make sure you guys if you guys like this information, go ahead and like, subscribe, hit that notification bell so you'll get notified when new videos like this come out to you. This information takes a lot of hours of research, a lot of time, commitment to really find out exactly what's going on in the industry, right? And you want a really comprehensive picture, both from the news, from the company's news, competitors, what other competitors would do to catch up, and their financials before you make these type of speculative investments. So make sure you guys be careful out there. Invest what you're willing to lose in some of these companies, but allocating a small portion of portfolio for these companies is definitely not something frowned upon. People are making a lot of money, and if you are making that money, never be afraid to take profits. Okay, never be afraid to take profits from the earnings you make on some of these companies. Then, if you lock in those profits, no one's ever complained from locking in profits. And when you do that, you can diversify a little bit, maybe in more traditional means like the index or a dividend portfolio or dividend ETF and those type of things, more traditional investments. If you want to learn about those as well, as you capitalize on some of your gains as well, you can go ahead and click here. So there'll be a video here that shows you some information on that, or maybe right here. I made a couple of videos on those for more traditional types of investing, more safer way to get into investing. So what we're looking at here and we're talking about today was the more speculative kind. So hope you guys have a good one. If you guys like this video, go ahead and like and subscribe, hit the notification bell so you will be notified of new videos that you want to watch come out. All right, so you guys have a good one.